Good morning, everybody. This is the live market open for Thursday, April 21st. I'm Yohay, Elam, Forex Crunch and Market Movers podcast, doing the show as usual for FX Street. If you cannot see the chat alongside the screen, please go to the address here, tlk.io/FX Street -Forex-live-video. Anyway, as usual, we'll talk about recent developments in markets. We have some realignments, various charts and levels. And the next 24 hours, I think everybody knows what's the big event for today. It's Draghi Day. It's the ECB. It's the ECB rate decision. Always a dramatic move. And as I mentioned, we had some realignments beforehand. So let's talk about what's going on in markets. In general, the US dollar is looking a bit better. Okay, it's across the board. Commodity currencies are, of course, stronger, but they sort of stopped the rises, okay, especially in comparison to what's going on in oil. So oil is on a roll, especially after inventory data yesterday was great, and there's tension towards the ECB and some realignment towards the ECB. You know what, let's begin with the chart today. So this is the realignment I'm talking about. Euro dollar fell back to the lower range. It fell under resistance here. Well, now it works as resistance. Beforehand, it worked as support. 113.35, okay, which was the lower end, the lower bound of the 113.35 to 114.60 range. We did find support here at 112.50. Then we moved back up when the dollar sold off earlier this week. And now we're back to the lower range. We had a fall down yesterday, hugging the 113 level. 112.50 is support. Perhaps markets are fearing what Draghi will do. In the past, sometimes they realign themselves toward, the euro fell ahead of Draghi, ahead of the ECB, only to bounce later on. This might be the case. We'll do a preview of the ECB meeting shortly. Okay, let's continue. Pound dollar. Here we had a move to the upside earlier this week, and also yesterday we had a drop. Currently it's at 143.65. 143.50, more or less at this line that worked as support. So 143.50 still works as now there is a battle over this line. 144.20, 144.40 is resistance. 142.80 still works as nice support, capping the pair here last week, and then also capping the pair here this week, and then working as a stepping stone, sort of as support. Anyway, these are the levels to watch. We have retail sales later on. Dollar yen, finally a move to the upside. So we're actually the highest levels since, well, not that long ago, but earlier this month. So after hugging the 109 level, remember the 109 level capped the pair at the beginning. After this fall, it was the first post-drop recovery. And we had it move below, above, and then this line has been a bit shattered. Now we got closer to 110. Actually, this morning the high was 109.89, 11 pips below the high level of 110. So anyway, here we are at the moment. This reflects the strengthening of the dollar and also some risk on sentiment that, of course, does not favor the yen. The yen is a safe haven currency. Dollar CAD. So in dollar CAD and the Canadian dollar, we did see an extended move to the downside under this 126.30 line, even dropping under the round number of 126, but still a bit shy. Okay, so yesterday we had an extension. Of course, it went hand in hand with oil prices, but afterwards we had some kind of stabilization. Now we're sliding once again, but all in all, we're in a consolidation period in dollar CAD. More or less goes for the Aussie dollar. So we did reach new highs yesterday, but just marginally new highs at 78.30. Resistance is 78.40 because that's a veteran line. Let me zoom out just to show you a bit why I like this line. That's because it capped the pair back in June last year. Okay, so it's a line last seen 10 months ago. That's where we are now on the Australian dollar, but consolidating. Okay, This worked as a break. Good morning, Luca. It's 77.40. Kept the pair beforehand, and the pair is way above this level. Not really looking back, but a bit off the highs. Okay, just a bit of that. Kiwi dollar. Well, here we had a bigger tumble down from the highs. It got some altitude sickness or something like that. So we reached 77.50 earlier this week, and then we had a grind back down. 69.80 still works as support, as far as I'm concerned, not the round level of 79, because it capped the pair beforehand. We're currently, well, just under this line, so maybe it's not that strong of support anymore. That's why I like this line, but perhaps it's better to look. You know what? Let's readjust. I must say the Kiwi is a bit more choppy than it used to be, so I move this line to, yeah, right here. So anyway, 70 is not such a strong level as it used, well, as you would expect, because it's a very round number, but not such a strong level. Dollar Swiss, moving up with the US dollar. This rebound of the US dollar probably got another push there, a kick down from the Swiss National Bank, the Swiss franc. Anyway, we made a break above this level. You can see that this break is quite strong, above 96.70 or so. We already were above 97. We reached 97.30, and so we're moving higher. This reflects the stronger dollar and also some weakness of the franc, because we are seeing a bit more of a move here in Euro Swiss. Good morning, Fabian. We're seeing it. We're at 109.70 at the moment, more or less. Got closer to 110. And just earlier this week, earlier this month, we traded under 109. So maybe there is some action here from the Swiss National Bank trying to push the Swiss franc lower. Perhaps they reacted to a weakening of the euro, and perhaps they're preempting. Swiss National Bank is preempting the decision of the European Central Bank. We've seen that in the past. That's why I make these suspicions. I have no concrete evidence, of course, but we are seeing Euro Swiss move higher, and the consequent with the stronger US dollar is dollar Swiss is higher as well. Question here by Fabian. The yen was weaker this week and the Japanese pairs went up. What's your reason for that, and what's your outlook for the yen? Well, yeah, the yen is weaker this week. We're seeing good mood in markets. I mean, remember, the week began in a very negative manner. I mean, for sentiment, it was the Doha summit back on Sunday. It totally failed. The leaders did not agree on anything. But then we had a rebound, profit-taking, a strike in Kuwait that has ended since then. But anyway, we're seeing oil prices move much higher, more risk sentiment, and this is, of course, working against the Japanese yen, and other currencies are celebrating, especially commodity currencies. Euro, not so much. Okay, so what's my outlook for the yen? I think the yen will not go too far. I mean, dollar yen will not rise too much. We will not see a big weakening of the Japanese yen. We have a rate decision next week in Japan. Don't think they'll do much, but anyway, there's now better mood in markets with higher oil prices. So 110 is the limit on dollar yen, then 111. For other currencies, yeah, it depends more on individual currencies. So euro, yen, well, it depends on Draghi, but for commodity currencies, now we're seeing a period of consolidation. Well, it could be a bit mixed. It's each currency a bit to its own now, but the Japanese yen is not. I don't see it weakening too much. Okay, let's get back to Euro Swiss. We talked about that. Euro pound. Here we are, 78.73. So euro pound is weakening. It's mostly the weakening of the euro ahead of Draghi. That's what we're seeing here. Not too many reasons to be cheerful about the pound. Talk about the events we had yesterday. So anyway, we fell under 79.30, which is, as you can see, a clear separator of ranges. Further support at 78.30. Okay, so this is the 100 pip range I'm looking at the moment. Further resistance 80.20. Further support 77.40. Okay, euro yen, not moving too much. We did fall to the abyss earlier this week because of the risk-off sentiment that favored the Japanese yen against all the rest. Now we're seeing euro yen more or less consolidating, okay? Because the euro is weaker, the yen is weaker. They're a bit moving in tandem. I would not call it a risk. A risk on not only, I wouldn't say that euro returned to the basket of to the exclusive basket with the yen of the safe haven currencies. It's just a movement before the ECB. Pound yen, yeah, here we are again, more or less the same movement. Weekend gap to the downside and then a big recovery. Currently 157.30, resistance at 158.50 followed by 160, support 156.60. Okay. And of course, what we talked about beforehand, oil prices, a big breakout in WTI crude oil. The same thing goes for Brent. I think we're at the highest levels in quite some time. So this is the result of the figures we had yesterday. We're back to the levels last seen. Actually, November, that's 5 months ago. Okay, we finally made the break above levels seen here, seen back in mid-March before we had another fall to 35. So if we take a step back and look at the dollar, at the crude oil indicator, we're seeing a rally from the abyss here from $26, a move all the way up here, a correction, which looks like a healthy correction, and now a second surge to the upside. Okay, before we talk about events we had yesterday, I see another question. Dollar yen, at the end of the retracement, we need a catalyzer for down move, something that would make the yen stronger, any fundamental coming up. Dollar yen moves more on US fundamentals or on the stock markets in Japan and also in the United States more than Japanese indicators. Okay, today we do have a few US indicators, but first of all, they're released at the same time as Draghi speaks, so that makes it sort of not as strong, not as significant. Okay, and yeah, I would expect a bit more consolidation here. Anyway, I don't expect the yen to totally weaken. The markets didn't give up yet on pushing the yen higher. Okay. Hope that answers the question. Another question here: do you think we may see another backfire from Super Mario? He hasn't got much left to offer the market. Yeah, we'll talk about Draghi quite soon. Yeah, we covered all the events. Yeah, just before we talk about other stuff, here is the December move. Euro dollar fell all the way to 105.20. Just to rise 460 pips in one day. We had some consolidation. And this is another move. Yeah, when the US dollar was weakening once again. And then in March, we had this move right here, this candle. A big fall to the downside to 108.25, 108.30, just to shoot back up in the same day. Yeah, and since then we've gone a bit higher. Okay, I'll soon talk about Draghi. Let's just complete the events for yesterday. We had UK unemployment. As I said, the pound does not have real reasons to rise. UK unemployment missed weaker wages than expected, especially when including bonuses. Jobless claims are up instead of down, so it shows a rise in unemployment. And also we had the unemployment rate remained stable, but all in all, it wasn't a good report. Okay, so it was bad news for the pound. All right. US existing home sales was basically a non-event, was okay at 5.33, more or less as expected. The big event for yesterday, it pushed oil higher, kept commodity currencies, on high ground at least, was the oil inventories, a slower rise in crude oil, 2 million instead of 3 million, a drawdown in distillate, drawdown in gasoline, and another slide in production. Production isn't crashing in the US, but every week we're seeing a small fall. It's getting now further away from the 9 million barrels per day on the downside, okay? And during the night, we had the Australian NAB confidence tick down from 5 to 4 points. Not that dramatic. Okay, time to talk about Draghi. Well, I'll just mention... No, let's begin with the main dish and then talk about other events. So, Mario Draghi meets the press at 12 GMT. That's 1:30 in the UK and 2:30 here in the old continent. Beforehand, 45 minutes before that, we'll have the press conference. We'll have the decision itself. No changes are expected, okay? It's sort of 100% certainty, if you wish, that we will not have any changes in monetary policy this time. Why? That's the easier part to say, of course. Because last time we had 20 billion more in QE from 60 to 80 billion a month. Interest rates were cut. The main lending rate, that was a surprising cut from 0.05 to 0%, and the deposit rate was cut as expected from -30 to -40 basis points, deeper in negative ground, okay? Since then, we learned that an even bigger rate cut was discussed, and that would have sent the interest rate to the lower bound. So we know that we're not at the lower bound already from the meeting minutes, okay? The ECB also, in order to implement more bond buys, it also added more instruments to the basket, corporate bonds, and now it can buy up to 50% of any issue. In general, the ECB has its checkbook open. Okay, another thing they announced but was not implemented, and that's another reason why they're not doing anything today, because they haven't fully implemented everything, is the TLTROs. That's the targeted long-term refinancing operation. In simpler words, the ECB loves these initials. What it means is that banks get very cheap loans on the condition that they lend it to the real economy. So it's more targeted loans. So that's the T in the TLTROs, the first T. Okay, and with the current interest rate, it basically means that the ECB pays banks, because the interest rate is negative, in order for them to lend to the real economy. This is a bit of also a desperate action. Interest rates are below the bottom of the barrel, and the level of investment in Germany in comparison to GDP is also at rock bottom levels. And the same goes for other countries. The level of investment is very, very low. This has a few reasons. The banks are sick. That means that they have too many bad loans on their books, and so they're afraid to lend new money. And there's also another reason of confidence in the future. So why would you lend? Who would you lend to, and why would you lend money if these projects, if this investment has low chances of succeeding? Why would you build a new factory that sells, I don't know, even just bread, or I don't know, parts of cars or high tech or you name it, if there isn't anybody to buy it, okay? So that's just basically a lack of confidence. Okay, anyway, the ECB did a lot last time. What the Draghi also said last time, and that's what sent the euro higher, is that they're done with rates for now. Okay, used other words, but that was the message, and it was part of the prepared statement. It wasn't just something that he popped out of his head as a response to a question. But so this is one of the things that can happen today. Draghi can reopen the door for further cuts as early as June. Okay, that would of course hurt the euro, but it's not a really big thing, because we already learned that from the minutes that the ECB can do more. Okay, that's one thing the ECB could do. And that would sort of, I would say, it's mildly dovish for the euro, perhaps with the recent fall in euro dollar from the high range of 113.35 to, below 113.35 to the range of 112.50 to 113.35. This is already priced in, okay? So it's not such a big deal. On the other hand, he would like, look, the ECB is doing a lot and nothing is working, okay? Of course, they want a weaker exchange rate, but for how long can they just say, okay, we'll do more, but maybe it isn't working, okay? So on the other hand, he'll have to pat himself on the back, something he often does. Well, he doesn't do it personally, but no, he pats on the collective back of the ECB, cheering, saying, okay, look, if we hadn't done all this, the situation would be worse, which is very hypothetical. But also you could say, look, things are improving, and there are signs of improvement. Higher business confidence in Germany, as we learned this week from the ZOO figure. More lending, okay? Private loans and M3 money supply are on the rise, and you can attribute that to the ECB. Again, the level of investment is terribly low, but you can also see the glass half full and not necessarily the glass half empty. And what else well, inflation. Last time it was at a worse situation, and now at least we have the revised figures for March, which show, for February, when we had the previous rate decision, it was minus 0.2, and now it's 0 for March, okay? Still very poor. The ECB's target is 2% or a bit below, and we're way below. 0 is not 2%. Also 1% is not 2%. At least also core inflation, which at the time stood on 0.7 for February before being revised up to 0.8. For March, it already advanced to 1%. So he can also pat himself on the back and say, look, we're succeeding and we're ready to do more. That's more a mainstream scenario. In this scenario, where he says, look, we can do more. The door is still open to more cuts, contrary to what we said last time. But we're already seeing some fruits of our action. In this scenario, I believe we'll have some kind of a rebound. Nothing major. Maybe lots of choppy trading, lots of ups and downs. But in general, we could see in this scenario where he reopens the door and but also says, look, we're successful, we're doing well. We could see the euro bounce a bit back up. That's sort of the main scenarios. Good morning, Sinatra. Bon dia. Bon dia, for those of you who don't know, is in Catalan. Good day. Anyway, what I want to say, that's the mainstream scenario. Now let's move to the more extreme scenario. I don't have the helicopter effect, but imagine the chopper coming down. In the last press conference in March, he was asked about the concept of helicopter money, and he didn't fully rule it out. What is helicopter money? Ben Bernanke, before he became chair of the Federal Reserve, coined this term. The idea is that you just hand out money from a helicopter. Okay, you don't do it literally, but the idea is that you give consumers, you give citizens money. It can be in the form of food stamps, or it can be in the form of, or just plain cash to their bank accounts, in order for them to spend the money, bypassing the banks, the ECB, the central banks in general, just to make money cheaper when they want to loosen it, and they make money more expensive when they want to tighten monetary policy. But their transmission mechanism, if you hear this term, is the banks. But if the ECB gives money directly to consumers, then they can spend it more easily, and they can revive the economy, push inflation higher. Good days, happy days for everybody. Now, this concept is very, very, very problematic. First of all, I don't think, well, according to, I think, the treaties, they forbid such an action of really financing the citizens. It also tells governments that, hey, you're incompetent, you're unable to do anything. Again, it's not probably illegal, and also it can get out of control. It can turn out into inflation or hyperinflation, or at least The biggest country in the Eurozone, Germany, had a horrible experience with hyperinflation in the 20s. That's Germany. In the Weimar Republic, if we won't dive into that, but there were also political consequences. They were asked to pay France and other countries reparations for the First World War, and it's a very complicated topic. But in general, in Germany and also in other countries, there's also bad experience from the 70s of inflation. So you can print money and buy bonds. You can print money and buy corporate bonds. But this is electronic money. But basically, giving money to people is a bit far out. Now, the ECB doesn't need to go as far as introducing such a policy, which I also see as a very remote situation. Just by saying that they discussed this option and they didn't rule it out, and they will maybe consider it in the future. This could have a negative impact on the euro. Again, I'm not sure Draghi will opt for this path because it'll trigger a lot of criticism. It'll create expectations maybe that the ECB can't fulfill in the future. And in addition, it'll also tell markets, look, we're failing at what we're doing. We're throwing everything we can, and inflation is not rising, and growth isn't coming. So we're going for the craziest possible thing. Okay, so I'm not sure he'll go that path. Again, he was asked last time about this idea. To go one step further is to say that there was some talk about it. Okay, see here a few comments. Just give the minimum citizenship wage to all poor people, and they will spend it on primary goods and inject money into the real economy. Yeah, that's the idea, because people who are poor will spend more money immediately, right? Because they'll need, and while rich people will save it because they don't need the extra cash. That's the idea. Money that you give to the poor, if it's food stamps in the US, has sort of cyclical effect. Yeah, the Germans would tear his eyes out and have him arrested. Yeah, I agree. If so far the German Constitutional Court in Karlsruhe was sort of okay with what the ECB does, with what the ECB did with the OMT and QE, and also we heard from Jens Weidmann, the head of the Bundesbank, that he supports the ECB actions, including QE, and that's also a shift. But really printing money, giving money to citizens, that's crazy. Here's Sinatra sharing with us a bill, an image from 1923, the Weimar Republic, 10 billion Reichsmark, probably good to buy bread and some milk. Okay, let's share that with everybody. I'm showing my face instead of the screen. So here we are. Okay, 10 Milliarden Mark. Okay, that's a lot of money, and that did not buy you a lot back in 1923. There are also fears of what happened in Zimbabwe or in Hungary after the Second World War, or a few other countries. So I don't think it's that situation. Hyperinflation is a political issue as well, usually related with some devastating war, dictatorships, or something like that. Not only in the case of Germany in 1923 in the Weimar Republic, but also in the case of Zimbabwe and other extreme cases. Of course, in the United States and in other countries, there was just high inflation in the 70s, and that's also something central banks would like to avoid, of course. Okay, good one at The Voice was enough to buy a coffee. Okay, let's continue. So that was a very long preview for the ECB, and it's not the only event. Okay, so at 8:30 we have UK retail sales. Usually, again, we should have an effect before the release and afterwards in the hour surrounding it. The pound moves a lot on the political mood in markets, and these indicators do have an effect, sometimes a strong effect, but short-lived. Okay, so we're expecting the month-over-month figures in this case are more important than year-over-year. So retail sales are expected to slide 0.1. That's for the month of March. It includes, the end of the month is the Easter holiday, so it might, if you hear that the figures are not really good, and I'm sure we'll hear that the figures are strange, either too high or too low because of, probably too high because of Easter, okay? And core sales, excluding fuel, are expected to drop once again, 0.4 year-over-year. I don't think things are that shabby. Last month for March, we had retail sales rising 3.8 and 4.1. Now we're expecting them to do this switcheroo. Retail sales are expected to be stronger than core sales. Anyway, this is a sort of warm-up event for the morning. ECB, as aforementioned, 11:45 the decision. Nothing is expected. And at 12:30 GMT, we have the decision. This is an opportunity to invite you all to join our live coverage with Valeria Bednarik, Mauricio Carrillo, and I and myself we're beginning at 11:30 GMT. That's 12:30 in the UK and 1:30 in Europe. Okay. At the same time, when Draghi begins speaking, we have the weekly jobless claims in the US. Last time we had an excellent outcome, actually, 253,000. Now we're expecting some kind of mean reversion to 263,000. All right. And we also have the Philadelphia Fed manufacturing survey. We had a big bounce last time at 12.4 points. Now we're expecting a slide back to 8.9. But other figures have been quite positive in manufacturing. I mean, in general, the sector doesn't look good, but at least in recent months, it's improving. Yeah. What else should we look out for? Yeah. Once again, Mark Carney speaks at 2 GMT, or that will be 3 in the UK. I think he already said everything, so I mean, some speeches are more important than others. In this case, we already heard him earlier this week. He warned about Brexit. It was back on Tuesday. I mean, he did not want to sound political, but only professional. But talking about uncertainty, talking about harder to finance the trade deficit, talking about all those things shows that the Bank of England, with all due respect to its contingency plans, is certainly worried, and they will vote against UK exit of the EU. Of course, Carney personally is a Canadian, so he cannot vote, I think, as far as I understand the rules. But anyway, that's not the important thing. Important thing that he has an influence on markets, and he joins the, if you want, Project Fear, if you want the sound voice of staying in the EU. Anyway, we had more polls that showed slightly higher chance of the UK staying in. In the various opinion polls, we have various results. There's one clear thing. There's a big group of undecideds, okay? So undecideds mean higher uncertainty. The conventional wisdom, which I continue sharing at the moment, is that we'll have those undecided will stick with the devil they know, stay in the EU, and certainty will prevail. Maybe bad certainty, bad situation, troubling regulation, other problems, but for markets, no news is good news in many cases, at least in this one. Let's see, I have a question here about euro dollar. We'll see if I didn't miss any other events. So you asked about euro dollar. Looks like they're bringing it down to take it back up later. Yeah, that's exactly what I suspect. Actually, I even wrote about it on Forex Crunch last night, that it may be a buy opportunity, because that's what we've seen in the past. Sort of markets fearing Draghi, and then when Draghi delivers but promises not to do more, or does not deliver, we have a bounce. It's also a take profit, okay? So we might be seeing it right now in play, in action, right? Yeah. Lucas, trade plan for the ECB went long. Half euro yen at 123.85. Adding half on a break above 124.50. Take profit 126. Okay, that makes a lot of sense. Maybe euro yen is a smarter choice because the dollar is a bit more volatile. I see. Okay, thanks, Luca, for sharing. I'm now sharing it with everybody in the video. So yeah, that's also my suspicion. That's also what I wrote. That he's not going to probably talk about helicopter money too much, and it's just also positioning. So we might have a move now, only to see a profit taking a move later on. Okay, I would not rule that out. More questions? We just had breaking news from Sweden that they are fighting currency market with more monetary stimulus. A headline I see on Bloomberg. Let me see if I can get more info on that for you. The Swedish move might be related again to the ECB, like my suspicion about the move in the Eurozone. Okay, so what I'm reading here, Sweden's central bank will buy more bonds. They'll buy more bonds in Sweden to drive down longer yields as policymakers try to fight currency gains and threaten to undermine their efforts and rekindle inflation. The interest rate in Sweden is minus 0.5%. That's lower than in the Eurozone. And this decision was not a surprise. Okay, I'll leave you to read more about that. We don't focus on Sweden, but just to show you that, let's just show the chart on this. It should be more interesting. Or dollars, not a lot here, I would say. Oh, okay, this is quite a fall in dollar Swedish krona. I must be saying it wrong. Anyway, a bigger move here. So euro Swedish krona is falling but bouncing back up. Just to show there's a race for the bottom. We don't often talk about Sweden, lovely country, but talk about bigger countries usually. So that's what's going on also there. We had this also before the biggest moves came in January 2015. Denmark was afraid of the ECB's QE. Switzerland, of course, they removed their peg. These are the countries to watch, and Sweden also, I guess, did something. I just can't recall it at the moment. Anyway, in euro dollar, we're hugging 113. So we did stabilize again, frustrating stability here with euro dollar, the range of 24 pips this morning. I'm sure we'll have much bigger moves in the minutes around the release. Andy asks Sinatra, should we buy euro dollar? My opinion on this is, I see a potential for history repeating itself. Remember, if Draghi talks seriously about helicopter money, then we could see euro dollar extending its falls, okay? And S&P approaching all-time highs again. Yeah, better mood in markets. When we talk about S&P, we're talking about 2140 or 2137. The levels to watch, well, it's a bit shy of that level, closer to the previous high of November, but not at the highs seen back here in May. Oil prices are up. Probably now there's a much bigger correlation between oil prices and the market mood. On the verge of a new crash. Yeah, maybe, because we've seen lots of range trading in range. I mean, if we zoom out to well, even if we go further to the weekly chart, this is the big crash of 2008, 2009, and then since the beginning of March, or mid-March, well, 2009, in the past 7 years, until not that long ago, S&P went up, a few crashes in the middle, but in general, you can see quite a clear trend. But now it's much more of a consolidation. I suggest checking out Dale Pinkert's show. He looks closely at the S&P, also the dollar index. Anyway, we've seen a few good weeks in the S&P. Yeah, that could be a move before the crash. We heard George Soros earlier today warning about sorry, China will take the world down because of a credit bubble. I don't know. He made some good calls, but some wrong calls in the past, so I don't know. Anyway, USD, S&P 500. I would say it's more oil leading than the dollar S&P 500. I don't have a straight answer for that. There is some positive correlation. We are seeing in many cases the dollar rise against at least against the yen with the S&P 500. That's easier to see. Against other currencies, it's much more mixed, especially commodity currencies. Okay, and another chart from Sinatra. Crude morning H4 bearish, RSI bearish divergence. Okay, let's share it with everybody. Yeah, is this his chart you shared with us yesterday? If I'm not mistaken. Anyway, looks like an extension of the rise, but perhaps it's an overbought conditions. Now we could fall. Anyway, thanks Sinatra for sharing. It's time for the wrap up for today. Same but updated. Okay, so yeah, so we did have a break above this downtrend resistance line, but we're still but we could fall back down. Okay, we'll follow that. Thanks for sharing. Thanks for the follow-up, Sinatra. Okay, it's time for the wrap-up for today. This is the wrap-up for the live market open for Thursday, April 21st. It's Draghi Day, D-Day. Okay, and what's going on ahead of Draghi? The US dollar is looking a bit better, consolidating against commodity currencies, looking stronger against the euro, again against the yen, also a bit against the pound. Oil made a big break to the upside, the highest since November, after inventory data showed less production, less crude inventories build up, and a drawdown in gas and distillates. It sort of has the bigger impact. Tension towards the ECB and the euro is sliding, afraid of helicopter money, perhaps. Yesterday we had bad figures from the UK, employment missed with weak wages and rising jobless claims. Oil inventories, as I mentioned, were okay. The other figures did not move the needle too much. Today we have UK retail sales. Expectations are a bit low, but I will not be surprised if we'll have a rise thanks to Easter sales or something like that. But anyway, watch out for commentary that will dismiss the report because of the Easter holiday in March. Big event, of course, as I mentioned, the ECB rate decision. 11:45 is the decision. We begin the broadcast at 11:30. The big event is Draghi's press conference at 12:30 GMT. Quick preview once again also in this wrap-up. No change in policy is expected after the huge stimulus package the ECB introduced in March and hasn't yet fully implemented. The last part of the implementation of the TLTROs is waiting for June. The big question is the tone. Will Draghi, Pat, and the collective back of the ECB see the glass half full because of some improvements in inflation, or will he be negative, try to talk down the euro, see the glass half empty? You could find also a middle ground of keeping the door open for further cuts if necessary, because we already learned that from the meeting minutes, and also asking for some patience for the measures to work and talking about success. As always, he'll ask governments to do more, because the ECB cannot, he already said in other words that the ECB is the only game in town, and it cannot last forever. The big elephant, if you wish, the big thing that can move the euro down is hints of helicopters. The choppers are coming. If he says there was a discussion of helicopter money, it means putting money, printing new money and giving it directly to Eurozone citizens. That could be a big negative for the euro, but also could trigger criticism of doing something that is illegal, that can trigger inflation, and that can and the ECB eventually cannot implement, and it will also be admitting its failure. So, it's a nuclear option, helicopter money. So if you go for using a nuclear bomb, well, there's a fallout. Anyway, that's the big event for today. We've seen the euro-dollar weakening. My suspicion is that it could bounce a bit back, not too much, not like in previous events. Of course, I lower my expectations for little movements in euro-dollar, and inside hope for much bigger ones. Okay, other events we have today on the agenda. Everything basically is overshadowed by Draghi. We have jobless claims in the Philly Fed Manufacturing Index at 12:30 GMT. Jobless claims were quite positive last time. We have Mark Carney talking once again at 2 GMT. And Eurozone consumer confidence, overshadowed by Draghi quite easily. Also the CB leading index in the US. Okay, let's just take a quick look at charts before in this wrap up before we head off. So euro-dollar extending its slide now at the downside. It fell under 113.35. It was in the 113.35 to 114.60 range. Support at 112.50 and 112.15. Euro pound dollar 143.50, flirting with this line, a bit lower than yesterday, with the US dollar regaining some strength. Dollar yen at the highest levels in a few weeks. 110 is resistance. We're sort of at the high end of the range. Dollar CAD, Canadian dollar is still looking good. It reached dollar CAD reached new lows yesterday, but we are seeing some kind of consolidation. The round 125 level is below. 127.50 is very strong resistance. Aussie dollar also made it to new highs yesterday, but didn't go too far. 78.40 is resistance. 77.40 is support. And the Kiwi dollar here, we're seeing a bigger consolidation, finding support at 69.50, 70. Let's see if it reemerges as resistance. Anyway, the big event is, of course, the euro. We had here Luca talking about trade plan about euro yen. Maybe we'll just take another look at euro yen consolidating, but maybe it's the calm before the storm. I'm sure we'll have choppy movements. I don't know in which direction. In the past, we've seen the euro sell towards the event and bounce back up. Again, helicopter money is the nuclear option. The mere mention of a discussion of this wild concept can do a lot. Okay, so let's see here another comment before we go. On oil, I see 45.75 is quite a strong resistance. 0.23 fib of decline from June to the 15 highs. Yeah, I think the 45 level will also be watched by others because it's a round number. And in general, I still remain a bit bearish on oil because once we have higher prices, we'll have higher production, and there is a limit. I think there's a bigger cap. There's the path of least resistance is to the downside, at least from these levels. Anyway, wish everybody a safe and successful trading day in the markets. We'll be here, of course, tomorrow. Invite you once again to come to the live coverage of the Draghi show from 11:30 GMT. All right, and so that's it for today. Thank you, and bye-bye.